You all right?
Morning, sir. I trust everyone is well.
Yeah. But start up as normal. Just give me a couple of seconds. Trying to find to WhatsApp here. I posted a couple of things on the group there, and a guy just WhatsApped me and he wanted the details on the Microsoft, and I just checked he's on the group. I wonder why he asked that question when the details are all on the group. So I get a lot of that. So when you get stuff there, just basically just like read it. What to say?
Morning, Roger. Can I speak?
Of course you can, young lady. Absolutely you can.
Thank you, sir. I'm in Dow Jones since yesterday, and I see all the indications is for upside, up. Obviously, I'm in the red, but I want to know from you if it's worth putting my stop loss higher.
Go on, sorry, I'm interrupting. Go on.
Yeah, should I put my? I mean, it's so near stop loss. Should I put my stop loss out of the way and hope it will turn around? What is your opinion?
My opinion is when you go into a trade, you have a risk calculator and you work out the risk where the stop loss is. If you start making a habit of moving it away, your risk profile let's say is 100 units. To make dollars, rand, pesos, 100 units. Once you do that, you're increasing the risk. Now, the problem, obviously, But what I'm saying is, okay, then it stops you out. It happens quite a lot of times. Then it comes off, and you would have been in a profit. The problem is, you do it once, and you end up in a profit. You make a habit of doing it, so it moves up, and it gets close. You move it again, and sometimes you keep on doing that. Now you're in a financial hole. It's probably better just to take the pain, and then if it comes off, maybe re-enter rather than start modifying away. That's my official tone. Rather not modify away, modify towards the market price. And my unofficial tone is purely on a psychological basis, and that's something emotional I've been through myself, is once you get a habit, I've done it, not so much in the past, once you get a habit of doing it and it comes off, not if it goes wrong, if it comes off and it works out for you, that's the more damage done. Because now, because it worked out before, you make a habit of it, and now you're in the dwang, the financial dwang. Because every time it goes near your stop, well, it came out last time, I modify. This one doesn't, and now you're stuck in it. Now you're 40–50% down on that one to get modifying away, and then you say, "What do I do?" I say, "Well, no, get out of it." "Oh no, I'll lose too much money." "Oh, so you want to lose more money?" Then the psychology is taking over because you're not thinking rash anymore. If you get stopped out, it's tough. It's one of those things, but that's what a stop loss means, stopping the loss. One of those things. That's my opinion. You interpret it as you want. Etienne's been WhatsApp me a little bit last night and this morning. I did reply to other stuff to do or whatever. I was asleep. I used to sleep early. But I've been formulating a couple of things I want to discuss. I'm glad he's joined me today. I want to formulate a couple of ideas. It's not going to be sent out as signals. Just check it out. Simple for the trading room. because the fundamentals are making it an absolute nightmare to trade at the moment. And from a 65–70% hit rate in the last 2 or 3 weeks, it's gone down to slightly less than 50%. I don't want my credibility or my name being thrown out, don't want to throw my credibility name away. And it's the GBP CAD's doing okay. GBP CAD, yeah. GBP USD is jumping around, it's all right. But the 2 or 3 others have been knocked out. And they're doing good if you like the US CAD, and then it comes screaming off. And the same principle. I'm going to look at just now a couple of things before I've just done my little morning summation. I like using these fancy words. Okay, so my morning summation is this. I listen to Bloomberg and Bloomberg in the morning. I listen more on the radio and potter around with it. And there's something called, I know about it, I'm just mentioning it, it's called the sentiment indicator. Now, I've mentioned many times, since the advent of COVID and the exponential increase of the retail market, because you're forced to work from home, and the Zoom and all those sort of things came into place as a result of it, the sentiment indicator is a big, big deal now. Sentiment is emotional rather than rational. And if you don't like it, never mind, overcome the dislike. Go into Facebook or Instagram sometimes and look through the stuff on there. 95% it's got no rationality. It's all emotional stuff, whether it be politics or film stars or animals or whatever it happens to be. And I just thought I'd make a point of actually looking at Instagram, and we'll go and do it, by the way, this morning, and Facebook. But we'll go back to Instagram, start off on that. And I paged down all the stuff that was being posted for me, and all of it was superficial sentiment, not based on much more than that. Now, that is an emotional effect with, shall we say, the retail market is now, because of its size, is more that kind of sentiment rather than actually having an effect on the markets, and it's making it more difficult to trade. And I'm thinking, yeah, I still see a bit of downside there. And the NAS is still okay. I mean, we've got a signal out in the shorter term today with a very cheap, about $20 a micro, I'm good to say. But I'm still in it. I'm taking an extreme knock at the moment, but I'm not going to move my stop. It's the same place. What is it? 84.4. So it's about 30 pips. So if I get knocked out, well, that's it. Let's get a big knock, but that's it. NAS is still at 31,000, so that seems to be okay for the moment. But I'm having a torrid time. We all are. So if you've got any trade ideas, post the normal way. I will be posting in a moment or two the normal economic calendar and stuff. If I remember my name as well, for those just remind me or whatever, I'm sure you got it. My WhatsApp number, etc. But we've got a moment or two. I want to discuss something that's been putting out, and I've been looking at this morning, and I think we might be able to. I like to join in. Like people have traded before, and it's very important. Anna Marie Farney's there. Etienne, of course, was here. Farney, Marius Smith, and whoever. Market. Sometimes it doesn't matter where it is. Trade before. Ends there. You get the idea. So guys, Mandler, whoever who's been trading at least a few weeks, maybe longer, 2 or 3 months, got a basic idea. I want to discussing it. This just a very simple, straightforward strategy. I'm all day on it, but I spent a couple hours this morning back testing it, and I think we might be able to do something with it. So I'd like to go on it. Okay, and Gerard, of course, as well, and Mandler, they traded a bit. So yeah, I want to discuss that just now. Quick morning summation. To answer your question, yes, I did. But it's all about the South African thing. As Mark said, no surprise there. The whole culture is utterly riddled like cancer to its core. It's not a question of is it right or wrong. It's whether I can get away with it or not. I'll give you an example. I went to a do, this is quite a few years ago, 7 years ago, and had a meal, and then I had a couple of beers, and then started getting phone calls saying, watch out, don't take that road, roadblocks are out for drinking and driving. Now, that would never happen in the West. They would never, ever do that. You know what I mean? In other words, they just don't do it. In fact, if you go to the pub and they see you leave the pub, the guys in the pub, and you get in the car for a couple of pints, they'll phone the police, they'll shop you, far than say warn you. See what I mean? So the whole culture is, I'm not saying right or wrong, drinking and driving, see that as an example. So the whole culture is riddled with what the hell you can get away with, not the ethical point of view or the moral point of view. And honestly, that thing just put in perspective. It's not just gold. It's innate within the thinking. That's why he come up and says, no, we shouldn't be doing that. You'll look at it strangely, take that notice and go do it again. And that's what you got to say. It's not the intelligence, the brains, or whatever we talk about. It's the innate, absolutely no moral sense of right or wrong. It's just sort of pervade right the way through. And it's coming to much that in the West, much more now than it was, let's say, 30, 40 years ago. When you start reading books of, let's say, Hornblower's time, or everybody Hornblower, quite a famous fictional seafarer of Napoleonic times, even books going back 50, 60, 80 years ago. It's more of a right or wrong moral ethical aspect. Worldwide, it seems to be going out, but particularly over here, it's not even an argument anymore. And that is one of the issues that creates these sort of problems. And it's quite frankly violent, it's quite dangerous. But yeah, I did see it, but I can't say that any here and there surprised me. We know about it right through every facet of industry, whether it be Transnet, the Chinese involvement in Transnet, the EFCON, right the way through. It's a cancer, if you like, I'm afraid to say. But we know it. Unless you're a dictator, then I don't know what you can do about it. Anyway, going back to what you're saying there, let's have a look here. Got the saying watching. Yeah, okay, fine. AUD-JPY. Another thing you'll find, what I try to do, coding people, if I say I'm going to do something, I try and back it up and do it. That's another thing I find. Lack of rocking up on time and lack of doing what you're saying you're going to do. Oh, yes, we must get around to, or yeah, we're going to do that, or we must do lunch, or whatever, or yeah. Rather, in other words, you own it if you say something. I'm going to go and see you on Wednesday at 10 o'clock. You've got to own that. Not just say, I don't pitch up or fire me for SMS because your uncle died, which is probably a bit of a BS anyway. In other words, start saying, I'm going to take responsibility for owning it and reliability and things like that. And those are sort of things that needs to be worked on within the culture, in my opinion, if we're going to set anything straight in this, quite frankly, most people say it's stunningly beautiful country. And a lot of going for it. It's just the cultural attitude that really caused most of the problems, in my opinion. And I think we all know that anyway, so there's no thing going on about it. Okay, AUD-JPY. Right. I think we're discussing that. I mentioned CAD-JPY, USD-JPY I mentioned yesterday. Technically, absolutely fantastic. I think it's a sell. Just worried a little bit about where there might be a change of market sentiment. AUD has been a bit weak, but is a change of market sentiment. And Japanese being strong is a change of market sentiment. On that basis, I'm a little bit scared. It's in the sell zone, right? And I'm going to come back to this in a minute. And from that on the daily chart, and it's right at resistance. In theory, that's a sell. But I'm just worried that it might have a little bit movement more on the AUD-JPY north, simply because it could be some strength creeping back in there in China. Having said that, looking purely on a technical basis, same US dollar, Japanese yen, as mentioned yesterday afternoon, and CAD-JPY, technically speaking, they're all sells, and good sells as well. The 4-hour downtrend has been broken on the day chart, good thing. On the 4-hour, it's in the neutral zone. Okay, it's below here, it's above there. Remember, these two are the most important. Not that that's wrong with this one. It's just these are far more widely used. This is widely used. Don't get me wrong, but these are very widely, the most widely used. And this and the 10 the 10 is very widely used as an exit and entry point. And often saying one of the most difficult is when to get out of the trade. When is an exit point? Often the most difficult thing trading is now you're doing okay, when do I get out? And the 10-day, which I'm going to come to in a minute, after I finish a little chat, see how it works out. It's a good for when it breaks through a full candle on it to exit. We'll come to that in a minute. I want to go into a bit of detail on that after we discuss this one here. So I see them saying on the 100-day, etc., quite a bit of resistance there. I'm not that confident on buying it, and quite frankly, on the daily, it's definitely a sell. On this one, it's not. It's a reasonable seller still, and on the weekly, it's neither one thing nor the other. On the 1 hour, what's that tell me, really? 1 hour you got to buy. I'll give you the short term 1 hour you got to buy. Give you that. But on the daily, it's still a sell. Okay. So I'm going to be a chicken on that one, but you can disagree. Magda and Tomby, a few of you, Marius, have disagreed before, and you've come right. I'm the first to put my hand up and say, this is not about an ego trip. If you're wrong, you're wrong. If you're right, well, you're right. And so that's just my opinion. Okay. But that's what I'm throwing out. Maybe I'm just a bloody chicken. Any of you tigers out there think this is a good buy or sell or whatever? And I guess you feel that. Go out yourself. How many times you gone in, so I'm a bit worried, blah, blah, blah. You know, a routine the lines, he's into us okay. He's probably just covering his backside. And you've gone for anyway, and you've done okay a few times. So yeah. Okay, now, do you want to move on this? Couple of things triggered in what Etienne has been sending through to me. I often get busy, I can't reply, and someone sit at night time and fall asleep, but I sit in the morning. I'm quite an early riser and early to bed, early to rise. Makes you stupid, poor, and not particularly wise. Healthy, wealthy, are you kidding? As it's okay, well, that's just stuff. I'm up as well. Was it 8:44? Looks like, yeah, just hit the stop. Okay, so yeah. Is the NAS still moving up? Just quickly check that. Can't see a thing on that. Yeah, we'll see. That might come right. Anyway, to go back, big smack on that. So it happens. Right. I've been thinking a lot, playing around. I'm thinking that maybe instead of, obviously, when a major non-farm come out or a CPI comes out or a GDP comes out, keeping out the economic calendar, I'm thinking looking now for short-term stuff where you use purely technicals. Okay, we'll look at that first. That comes first. We're going to go on that one. Euro NZD. Then I'm going to spend some time discussing it with you. See if we can make something work on this one. We'll shoot the guys like Marius and Etienne. They've got time to do it as well. What do you want to do with this? Sell it. Morning, Pia. What do you want to sell it? The euro's quite strong at the moment, by the way. NZD, I think, also is getting a little bit stronger as well. It's still in a range trade. I'm going to be honest, I'm not sure of that. It's not burst out either way. It's not burst out down here, and it's not burst out up here. It's still in that range. What is the range? It's a over 100 pip range, and it's not really at the bottom or the top of the range at the moment. And it's in fact probably 2/3 down. But if you want a range trade, you need to sell it near the ceiling, not just below the halfway house in your room. You know what I mean? It's about 2/3 of the way down if you want to sell it. Let's say you're going to sell it to this lad here. That's going to give you 40 pips. You stop up here, clearly 90, 100 pips. I'm not too sure about that. Well, it's got a bit of a bounce here by look at it as well. I'm not too sure about that. But
Sorry, Mr. Rogers.
I'm going to leave it. Go on, Tembi.
I'm already on Nasdaq Micro, and I just received another signal for Nasdaq. Is there a need to place it, or am I already in the Nasdaq?
Okay, my answer to that is, what do you think? What do you think?
I tried to place the Nasdaq, but it didn't allow me to place the trade, so I thought maybe I'm already in.
Okay, can anyone answer that? Marius or Gerard or Fani or Pietro or Lorenzo? Can anybody answer the gentleman there? What do you think on what that question was? Because this is quite important. Because that
yes, mate.
Worries me a little bit, that I'm wondering why you're asking that question. I'm glad you did, but it might be for everybody else. And these are
yes, mate.
So go for it, Ken.
Yeah, the last time I remember, if you already in the trade and the signal comes again, you don't have to go in again. It simply means that the price went back to the original entry, or maybe you are having a better price. But having multiple trades on one index or on one pair can be very dangerous, because now you'll be doing a replica of what you have done, and if the trade goes wrong, then you are still going to lose more. So if you already in a trade, just ignore that and keep on checking it out, whether it's still going in the right direction or so. A lot of people did that mistake. We all thought that when we were still beginners, but that's my answer.
Okay,
We're
thank you very
100%.
much, Mr. Ken. Very
Thank you
kind
very
of
much.
you, sir.
Thank you very much,
Um,
Mr. Ken. Yeah, that's 100%. Now, that's
we'll
absolutely
definitely do so.
okay. This is very important. You get a risk calculator, right? I'm going to put a trade in, right? Doesn't really matter. If you want to go short, we'll do a short then. You put the stop loss, let's say, up here, and you're going to put the TP. Make sure you put the TP. Put the TP down here. Make it 0.72. 0.72. Now, the whole point of the risk calculator, it tells you there it's 95. Call that 100 Rand a micro. You know you can risk 300 Rand because you've got a 5,000 Rand account. So you work out my risk is 300 Rand. So if I lose 300 Rand, I can handle it mentally and my account can handle it. 300 Rand. Now you place the trade. Now you go in again because the signal repeated because it came off. Let's say you're going short and the following day it comes back to the single entry. Just send it out again because a lot of guys might have missed it last time. Now they get another opportunity. If you go in again, you're now risking 600 Rand, not 300 anymore. That should hopefully commonsensically tell you, well, no, that's why you have a risk calculator. That's the point. And the other point I'm not getting across is, you get a signal saying get in at 73.84, and it pops up by the time you get the signal to, let's say, 74. And you like the signal, you still got to like it. Not if you got to take it. If you still like the signal, you check it out. You think, yeah, I like that. It seems to make sense to me. I agree with it. Then at 74, you would clearly go in at market. You wouldn't go in a sell stop or anything like that. Because I'd rather get in, the signal says that, and I believe in the short. If I can get 74 on the market, I don't have to put a sell limit in, not a problem. I can go in at market at a better price. What a pleasure. Maybe you can do it a long time. To me, that seems fairly straightforward, but I'm finding in a lot of feedback, people are not getting this. And I think it's because they're not employing the thinking process, they're employing more the emotional jumping in progress. They're desperate to make a quick buck. So I'm not a psychologist, but certainly haven't got a degree in it. But you see what I mean? So just take a step back and just employ a little bit of thought into it. Say, hang on a minute. I'm happy to pay R1 million for the guy's house, but he's offering 950. I'm not going to say, no, I'll give you R1 million for it. No, you're going to accept the 950, aren't you? Makes sense. The only time you buy stop, sell stop is when you're waiting for it to break through a support or resistance. But if the signal's clearly saying a short or a long and you're getting a better price, take it. And if it comes out the next day because it's gone down and gone back up again, we just send it out for the guys who missed it. If you go in twice, now you're 100% overexposed. And if you can afford 600 instead of 300, why go to 3 in the first place? You should go on in 6 micros. That's the basic way. And I'm glad you asked it because I'm thinking a lot of people, I do get feedback on that. And I just want somebody else to explain it. As Ken explained it perfectly there, it's just just take a step back. I mean, I need a TV and it's breaking the budget. I get it anyway. But oh, hell, I'll buy 2 TVs. Don't need the second one. I really broke the budget. Why do that? You get the point. And if you get lucky, you've doubled it up. If you do lose, remember, you get to have a small account. Now you're limited what you can take, and it might even get margin called if you're overexposed because you're just using all your free margin up. These basics are what we try and get across in the trade room and in the classes, and they should really be known, the basic arithmetic, before you actually place a trade. Because you not understand the basics behind it, it's like trying to drive a car. We're not sure how to stop it or how to change gear, wondering why you have an accident. Not the car. It's not that. It's just you're not learned how to drive it. We can't predict the market. Sometimes we can, sometimes not. But market variables is a lot of time, quite frankly, crystal ball gazing. Because there's so many variables, there's so many million people doing it. But those basics have to be understood. And it is not degreed stuff. It's basic sort of pre-matric calculations that need to be understood. And it's very important. I'm pleased when people ask these things because they're too scared to ask. I don't know what's going on in their head. and I can't clarify it. So this is vital to understand. If you're not grasping these basic concepts, you get a battle in this business. I mean, I won't mention names. I've got guys who tend to train them, gone to a lot of platform training classes, and they're asking questions that should have been learned in the first class, not the 21st class. And that is a worry, because how can they grasp the machinations of the market as it becomes more complex with all the fundamental aspects involved? Okay. And all the eggs in one basket, you see, getting that concept across. If you've got £1,000 in your account, by definition, you have to have all the eggs in one basket, because you don't have enough capital to diversify. And a lot of people just can't grasp this basic. And it worries me a little bit, to be honest, because this is not, you know, degree in bloody cybernetics stuff, you know, it's basically common sense, you know what I'm saying?
Roger?
Yeah.
Okay, I got your point about moving my Dow Jones stop loss. But now, the signal that you sent out for Nasdaq this morning, it's a different signal than yesterday, with a lower TP and a lower stop loss. Yes, yesterday my price was lower than today's price. Now, I just want to know, I know what you said just now, don't change your stop loss and stuff like that, but isn't it
confusing?
I would like to take today's stop loss and TP and change it on my Nasdaq that I put up yesterday.
Right. Okay.
Is that a stupid idea, or am I completely wrong?
Not at all. And you've been doing it for a while, and I can see the confusion. Okay, there was one sent out. I think they might have forgotten about that in the office. Anyway, we sent out. This is more aggressive. You can see the other one was about 70 with a much wider. I think it did the trading with a wider stop loss. The risk is about 70. This is a tighter stop loss, because it's so much higher. So it's even slightly more aggressive with the stop loss. Simple as that. Now, what you can do, this is a slightly different scenario to what I mentioned just now. You've got, let's say, 10K in your account. And let's say you can afford to risk 600 Rand, argument's sake. You might have got on the micro there a 250 risk, 300 risk. You're slightly underexposed. You could say, right, maybe I can take another position with it. Falls within my 600 Rand risk exposure or risk profile, and do another one, if you like, with because it's only 20 this with a tighter stop in the theory at at a tighter TP, because the other TP was 12,000 and the SL was 13.1. So you could say leave the other one running, but I've got enough. It fits into my risk profile to maybe take one, because it's only 21 a micro, for a tighter stop, tighter TP, because it's a little bit higher, and try that one out. As long as you say, I've got 10 grand, I'm risking 600. I've got 20 grand, I'm risking 1,000, 1,200, whatever it is. If you got your entire 600 Rand into that initial trade, then you just have to leave it. Does that make sense?
Yes, it makes a lot of sense. I'll just leave it as it is, as the values of yesterday. Thank you.
Okay. Fantastic. Okay, now again, hits the stop loss, you're out. The natural thing to do, if it comes off, you think I'm going to get my money back and jump in. Take a breather. You might be right. We don't know. But sometimes that revenge trade can work out, but sometimes it can't. Take a breather. And if we get some more movement, some more direction from the DXY, which is coming off at the moment, anything coming out, there's US GDPs coming out later on today, a few other aspects, maybe you've got to be able to take the medicine. You're going to lose as well as win. I don't know if you like a couple of losses, when's the winning coming? I get that. But the point is, in this market, you're not going to win every time. And quite frankly, unless you're doing so, I don't know what you're doing. It's just difficult to lose every time as to win every time, to be honest. But so you've got to accept it. You're going to fall off the bicycle sometime in your bicycle riding career. I doubt if anybody out there can say I've been driving for 20 years and haven't had some sort of ding or something like that. I'm not saying a full-on car accident, but a ding of some sort. It's going to happen, okay? Just that's why we have to have this volumes worked out. And it's just clear, okay? And when it's tough times, maybe take a break, increase the learning aspect and see a regular rock and roll, more learning knowledge when those areas start easing off. One of the training rooms we've learned, as Finally was talking about yesterday, is you start blaming yourself, because it's quite a lonely job at times. That's why it's nice to have a forum where you can discuss and realize you're not the only one in the world. You know, you think your husband or wife just left you. At that time, you think you're the only one. It's all your fault. Well, hang on, no, 100 people breaking up at that per day, you know what I mean? And sometimes their fault, not yours, and some is your fault, not theirs. And in other words, throw it around a bit and say, yeah, the market conditions are all over the place, and maybe just start taking it easy and, you know, getting your head right and bouncing ideas off. So that's basically it. So yeah, I hope that was all cleared up. You've got 500 Rand risk or 100 Rand, or whatever, it doesn't really matter. Don't double up on it. Clearly, no. If it comes out again, well, you're already fully booked on the thing, do it. And it might be a different TP and SL, it might be an aggressive one. You've got your strategy on the previous one, stick with it. You can always, by the way, you can close part of it. You might be coming off in a funny market, you've got 5 micros or 5 minis or whatever you got. You can always maybe be in profit and you get a bit nervous, you have to close a whole lot. Maybe close a couple, let the others run. And again, a lot of people don't know that. And I'm assuming they're teaching that platform training. When I do platform training, I don't go into, I'm not a tech funders, I think we all clearly know. All I go into, when I fill in, I do platform, I fill in when one of the guys goes on leave, normally on a Saturday morning, you know, some might leave, but normally Saturday morning. And all I do is how to set the charts up, how to set your toolbox up at the bottom here with the trades up, how to, look at this, the performance looking terrible, rather hide it, pisses me off and everyone else. And how to add your watch list, how to place a trade, how to modify your stop loss, and how to close and how to part close. Once the guy can do that, then you can start doing the signals. And I think sometimes the details might be so much they forget the most important stuff. You know what I mean? You're too busy talking about twin overhead camshaft, and you forgot to mention how you change gear. But I mean, you can quite happily drive without understanding the clue what's going on with the bonnet. But as long as you can change gears, you get my point. Okay, and those sort of things, I try to get the basics across, and then they can actually place a trade and modify and close and that sort of thing. Well, we all say that the problem is, Lorenzo, we can talk to the face, but emotion's part of where we are. I remember years ago, I thought a sexy thing, all these karate films, to study karate. And the instructor said, why you want to do it? What's your motivation? Of course, it's, you know, fired up. And he says, until you become maybe brown, but certainly black belt, but probably brown, but certainly all the other belts below that, if you get in a real fight, all that goes out the window and you revert to natural self, you know, roundhouse punch, etc. You've got to have a, you know, it needs muscle memory of continual practice to change the natural way of doing things. And unfortunately, we can talk to a blue in the face in theory in the classroom, but the real thing happens, the emotions suddenly kick in, take over, and we do the silly things again. That's the way we all are. No particular picking on any right religion, gender, or whether you got hair or not, irrelevant. Age, I don't know, whatever. It's the same for everyone. And that is without doubt, that's why I'm trying to say, practice on and understand your emotions, which you do not learn on a demo, only on the real thing. And you can never get rid of them, it's the way it is, but at least you understand them more. Bit of self-introspection might help, understanding where's and why's and yourself. And then you can see, instead of just going to the animal reaction, you've got a brain, employ a little bit of that rationality. Okay, but sometimes market sentiment is so powerful, sometimes you do get movements of market sentiment that don't buy rationality. In other words, a fantastic film on Shakespeare or on Charles Dickens or Scott Fitzgerald might not sell many tickets. And then you get a ticket on the Jerry Springer show and it sells out. So it's not always rational, it works, if you see what I'm trying to say. Okay, so just understand that. Well, yeah, because you're getting more on top of your head there, Etienne. That's what guys need to work on. They need to get on top of the head and say, I bogeyed the last hole. It's a new day today. That happened yesterday. This is a new day today. I bogeyed the last hole, but that was the last hole. This is the new one. That takes practice, and that's what separates these pro golfers who make millions to the amateur who completely fails all the time. because they don't have that discipline and understanding to do that. And I'm telling you right now, I'm not the world's most disciplined. I'm very outward going and garrulous, quite frankly, and emotional. And it's been tougher for me than most. And I'm still not anywhere near some like actuaries out there in that sort of mental level. But it has to be worked on. So if you're an actuary and you're very, very introverted and very, very controlled and like Spock, very, very little emotion, actually in a way, you might not have as much fun as me when we go out because you're much more controlled, but you probably have more fun with that balance on the trading aspect. I will see anyway. I never feel invincible. Depressed is tough, yeah, but try to overcome depression. I quite agree. That's a good point, but never. The times I've come short by feeling invincible. Okay, normally comes back and bites. Right, US dollar CAD. I'll come to our stuff in a minute when we finish all these things here, Etienne. I want to mention it's quite important. This to me at the moment, the dollar's come off. You've all got the DXY. I presume you have. I think I do it every day. I'm pretty sure people don't look at it or check it or download or do anything with it. It staggers me how many people go to classes and buy study material and don't take it on board. You've got to. That's what it's for. That's why I post it, not just for the fun of it. So I like posting, to be fair. Okay, there you are. Economic calendar, and I'll put the yields up. We mentioned that many times, many times, the value of it. And the guys who take notes, stick with it, hopefully will do well. But if they don't, it's normally the market's fault. It's not their own fault. Right. The things you can control, you control. Right, now we had a trade out there and the dollar came off and it came back and we got smacked. Pity, because it did brilliantly. A lot of guys took the profit and we got up to 137, I think it was, a couple of days ago, about the 137 mark, 2-3 days ago, where it was. Modified the stock. The guys that traded probably did it, modified the stock, and they wouldn't have made much, but they might have made a reasonable amount. They would certainly made a profit. The guys that didn't do that and just left the stock where it was, unfortunately, would have been stopped out. That's the way it is. Now, coming back that for a trade, the momentum is still down. I completely get where he's coming from. Is it, Tembi? I totally get where he's coming from. And on the surface, that looks like a brilliant idea trade. It's come off quite a bit. The Canadian is not the world's strongest either. It's looking like, Manda, we're right, the Brent's coming off a bit. It's an oil-producing nation, so that might have a little bit of weakness on it. The dollar is very, very iffy at the moment. There's a lot of contentions of experts saying it could come down further, and other ones say it could go up from here. When you get two experts who run very large institutions who clearly know what they're talking about, have completely opposing ideas, then it makes me a little bit nervous. So I'm not going to outthink them. I'm enough humble pie in my head to realize I'm not a billionaire investor, and if I was and I have an opposite opinion, well, you get my point. So yeah, so in theory, that absolutely, technically speaking, is a buy. Absolutely, that's a buy. Okay, I'm just worried if that dollar might come off a little bit further. I don't know. So let's go this way. If we get a confirmed, and I think a minimum 1 hour, maybe even 4 hours, confirmation candle, we might get the bounce here. We've got plenty of upside, so it doesn't matter if you have to wait for several hours. You'll still have enough meat on the bones on the TP to take the trade, and the stock, even though it'll be slightly wider, slightly worse price, I'd rather take a confirmation up there and it hits up here somewhere than try and get in now and it continues down. And if you do take it, let's say where the crosshair is there, and you can get a confirmation, the stock can still put down there. It's only 70 odd pip stock, and you know, you can still take it up there, and you got plenty of risk reward. Upside is plenty there. So it seems to be, look at the 4 hour. So a check on that. It's a sell on the 4 hour, remember, so that's not helping matters. On the 1 hour, indecision. On the 15-minute, indecision. We don't really much, but the point I'm trying to make, we've got no confirmation, so we'll sit aside on that one. Okay, but otherwise, nice one. We came up with that. Was actually not a bad idea. That Tembi, I like it, but we want confirmation. Okay, all right. Okay. Now, if you want to look at a specific trade, and stop me, but I want to go some etch and trigger something here. This is pure to trade on, and you get the grasp the concept in shorter term. Right. Let's just go back to the Nasdaq. to show what I'm talking about. Now I'll use the micro. Okay, right. Now got it on the day. Now it's above all these moving averages. So at the moment, despite me talking about the highs there, sell by or whatever, I'm saying right now on the daily, take a note, ask questions, run it by again. I've looked this morning, might have some hope on this one. Clearly, we don't be selling, we want to buy. Okay. Now you've got the day. Now you switch to the 1 hour. We're going to back test this. I'm now using the 10-day, the magenta. This is a 10-hour, sorry. 10-day on the daily. It's a 10 times 1 hour. Now, as you checked, this would be on the 28th of March, round about there. Let's go back to 28th of March. You check on the daily, 28th of March. It's now, just give me a second here. 28th of March, clearly the price in the buy zone. You don't want to be looked at selling, you want to be buying. Okay on that. We can do it again if you're not sure. Just get the idea, take it on board, and then discuss. So you're looking to buy. Right, it's back down here. You wouldn't be selling down here. And let's say you're back down here. What's the time? They're doing practical. It's middle of the night, you're going to miss it. 8 o'clock. Okay, you might still be awake. It's gone up, right? It's cleared the 10 1-hour moving average. This is halfway house job. Hate the soap peel. This is the soap peel job. One leg here, we know where the other part is, in the water. You know what I mean? So it's open above the 10. So once you got that confirmation, you enter. You with me? So write that down. 12262. 12260. That's your EP. Got it? Now you want a stop loss before we go any further. Now, where's the stop loss in the hour? Let's use the hourly for a stop loss. Where's the hourly for a stop loss? That's giving you 100 pips. If the hourly gives you on the NAS, we're not talking about the euro dollar, we're talking about the NAS here. If it's less than 100, I suggest not taking it, or you've got to be out at 3:30 because of the jumping around on opening, but people opening and closing their spot positions in the world markets as the US markets open. So, but this fits nicely. So you're using the hour one, and you can put it just down there, your stop loss 100 pips. That's fine. Not the 200, the 100 pip. So far, so good. Now, can I just continue with this without you chatting? We'll ask questions afterwards. So we're going to enter here, right? We don't know what's going on here. We're going to enter here because it's in the buy zone. You check from the daily and put on the hourly below that. We're using the hourly one. 100 pips your risk. So 100 pips from that make it 12160. That's your SL. Now, you don't need a TP. You can put a TP a mile away. I'm not worried about the TP at the moment, right? But you can put it on if you like. Now you're in it, right? Now it's hovering. It's hovering. Now it's a bit like midnight. You might want to get some sleep. Well, you still got your stop loss. You're all right. If you want to put a TP right out the way, you can. I'm more worried about the 100. You've got protection, okay? And then you get up in the morning, and what's the time now? It's 8 o'clock in the morning. You're getting up. You check it out. It's still fantastic. Do I move the stop loss? Well, maybe you could. Maybe keep the stop loss modified to just below there, but try not close than 100 pips. You got it? And then you continue up. You continue up. You continue up. You continue up. Now it's come below it. Not this one, halfway house job. Not this one, halfway house. This one, halfway house. This one. What's the time now? It's 4 o'clock in the morning. Okay? You might not be awake at that time. Let's be practical. Okay? You're not awake, so you don't know that. Okay? You've got your stop where you moved the night before. You go to bed at what time? Maybe 9 o'clock. Maybe you moved your stop there. So your stop is nicely in profit at 12,774. So 12,260. That's so you're, what was that? So hourly chart. So you're in profit. Where was it? You're in profit. You're 150 odd pips in profit on a pleasure if you get stopped out. You wake up in the morning, and let's say you wake up at 6. You wouldn't have exited there because it's gone back up again. But if this was 6 o'clock, you'd exit, and that'd be a profit. But because you're asleep, if you wake up at 4, you exit. Never mind, you made a lot of profit. But you didn't. You woke up at 6, you saw that, but it regained it. So you hold on. You hold on. So you get a trade idea sent out by the company. And what my trade idea? Well, the overall picture, most guys, quite frankly, trading on our clients, I'm horribly honest here. I mean, Sephora, let's be honest, don't have much idea, so we can't send it out to them. This is for trading guys who get the idea. So only for you guys. So never mind, got a short, ignore it, completely ignore it. Etchen will like this, Morris will like this, pretty sure Fanny will, isn't it? Her as well, because they've got time in front, and so is Anna Marie. Ignore it, it's still above this guy here. So now it's now coming in here. What price you get at 12? What the price you got in at was around about this level here. Already at 260 pips up, and this is an hourly, not a daily chart. So this was you entered yesterday at what time do you enter? Well, 9 o'clock if you're still awake. You might not be awake. Well, if you are, great. And the next morning it's 10 o'clock. You're still in your 250 pips up, and you would hold this. You'd hold this. Never mind what the signals say. Ignore them. Hold it till you get a full candle breakthrough here. The only time you might question a bit is a CPI or a non-farms. When CPI non-farms comes out, do not close your position. You modify your stop to here. And if it shoots down, you still made a fantastic profit. If it goes the other way, you're still on board. And then you got the fundies out of the way, you still follow it and follow it and follow it until you get a full 1 hour candle break below the 10. You get where I'm coming from? Any questions? And if you like it, we can start back testing on the Dow and maybe GBP USD or Euro USD, or pick any you bloody like. But these move quicker. Just remember than the others. And don't forget, you got a bit of a straight here, you don't on the others, but there be it. 10 pip is not going to kill you. What do you think? That's based on what Etchen says. I'm looking at it, and the fund is stuffing around. We're not the slightest bit interested whether whether guys like Apple or Google or whether they like the yen or whatever. The only time you worry about a fund is it GDP coming out, or a PPI in the US coming out, or something major coming out in the US, like a CPI or whatever. That's what you calendar for. Then you move your stop. Don't say exit, you move your stop just in case it stuffed the system up, but through the fundamental movement. What do you think, guys? Should we back test and have a look at it? What do you think, guys? Etchen's already jumped in, but he called on pretty quick doing it every time. So I assumed you would. Right, the other guys have got the crack of what I'm on about. I like, it's very important to give me feedback. I know Anna Marie and Farney are those guys, and Mars are quite confident, and Gerard, but some of the other guys have grasped it. You need to build some confidence to see what you think. If you like it, we'll spend a bit of time this morning back testing it, because I think we need to spend some more time on that, because the fundamentals stuffing up. The last 4 or 5 trades you got out, I think 3 have been wrong. It's the wrong way around. And I can't change that overall because they won't get it. But for the guys here, I think they have enough knowledge to get it. You like the look of it. John likes it. Tomby, bloody hell, Tomby likes it. That's all right, Tom. No pressure on Tomby. You've been right so far. Good to have you on my side. Madeira likes it. Ulan likes it. Okay. And the beauty is, I have to say, if you got a job, maybe if you've got time to check your stuff on your laptop at work or your phone, if you go to the loo from a meeting or something, fine. If you're away from your laptop a lot, it's not going to work. You've got to have access to this to make it work. You can't say I'm knocking off for 5 hours and I'll check it out. I suppose you can make a plan around it, but it's basically not be full time, but someone's got access to this. And number 2, if you have, it won't bore you. You've got yourself mentally occupied, because that's another enemy of the guys sitting at home. They start doing daft things out of boredom. This you will not be bored. You can do the Dow. I'm suggesting the NAS. You can do the Eurodollar, whatever you bloody well want. But I suggest a dollar related. So you don't have to think about, you do the pound dollar, now you've got to worry about pound CPIs or the dollar CPIs. With the NASDAQ, all you're worried about is the dollar. And it's a quicker mover. That's what I'm suggesting. And you've got the micro. So I'm suggesting on this one. You got it. So let's back test it then. Let's go back to the daily. Remember, take note, daily. First of all, is it in the buy zone, is in the sell zone? Does anybody out there who wants to do this think that's in the sell zone, looking purely at the technicals? Please, if you do, tell me why. We need to clear it up right now. Don't have to put no in. I mean, I want anybody who says, does anybody see that's in the sell zone? No, it's clearly, utterly, obviously, well, I was talking to you, no. It's in the buy zone. Ignore the 10. Completely ignore it. I'm talking about these 3 here. These 3 here, it's been above this. In fact, we'll ignore this candle here, the daily, because it's not fully above. We'll go to this one here. So this daily one, in fact, get a notepad, keep a piece of paper handy. Let's just do this. Let's just back test. I looked at it. I think it might work. This. Let's have a go anyway. 16th March buy zone NAS. All got that. So what does that mean? We don't be shorting it. We're going to buy. Okay. Ignore technicals. Ignore Bloomberg. Ignore it. Purely on the technical. All right. Now we're going to go and back test on the hourly. Now to do that, you need to go back a little bit in time. Got to shrug it in a bit. So what's the date we got down? 16th of March. We're going to go back to here. So here was in the buy zone. So we're looking to buy. Now where the price is at the moment, I know it's zoomed in so much, not so clear. It's below the 10-day. So we can't buy there. We can only buy somewhere here. So what's that time now? 1716th. Can't see a bloody thing on that. 1700 on the 16th. Where's 1700 on the 16th? What the hell am I doing now? Lost it. What the hell was that? Write that down properly. After the 16th, that's right. March. Okay, we're going to go back to this timing here. So that's going to be 1700 on the 16th, like I said. 1700 on the 16th of March. Yeah, okay. You can see it a bit clearer here. Try again, moving in a bit. 1700 on the 16th. Oh, shit, can't quite do it. Maybe we can move it across a little bit further. That's it, that's better. Nearly there. Move it a bit further. 1700 on the 16th. I can't stick it there. Come on, tech guys, help me out. Should be hard. I don't know how to do that. I think I've got a better idea. Ah, got it. Okay, right. 1700 on the 16th. There we are. There we are. You can see it a bit clearer now. Okay, so starting back there. We can't go in now because we're not fully opened up a full candle above the 10. So we're going to wait for here. Remember, on the green candle, the bottom is the opener. On the red candle, the top of the body is the opener. So it opened above there on the next hour, not a day, an hour, right? Open there, right? 12,389. 12.390. Right, EP, got it? Right, now I want to just move a little bit more in. Where are we now? 16th. Oh, that's right here. It's still in, it's still in, it's still in, it's still in. We're out here. Okay, you with me? We're out here. What's the price there? 12,627. 12,627. That's 420, 237 pips. You get the idea. What was the time you're in there? The time on there is 1 o'clock on the 17th, and you entered, what was the time? 5 o'clock. So you're in 20 hours, okay? And you made 200 pips. Any groans on that one, guys? Okay. Now we're going to do another one now, because you're out on that one. You're not going to be selling it. You're going to wait till it goes above again. Came down here, you wait, and you wait till this guy, not this one halfway house, this one here. What time is that? 1 in the morning. That's your problem. You're fast asleep. You're going to miss that. Let's be practical. We're doing this for real, not for bloody people forget that when they're doing trading. So you're not in. It just as probably well. It's come down. You wake up at 6, 7 in the morning. You can't get in. The day goes by. Now you're bored. Maybe you can trade on something else. Maybe look at the Dow. Maybe look at Euro dollar or GBP. Make sure it's a $1. Nothing's happening. Nothing's happening. You're getting a bit bored. Nothing's happening. Okay. Nothing's happening. This opens above it. So now we're talking now, a couple of days you might have to wait. What's this now? It's the 21. Okay, maybe it was the weekend involved. I don't know. You'd have to wait. You see my point? Now we're getting the 21st. It's opened above there. Now you're in. 100 pips. Stop. You're in. You're still in. You're still in because it's not, the whole candle's not above. You're still in. You're still in. And you're out there. As you can see, you've already made that one there a profit, 120 pips. And it looks like it's probably about a day. I can't do it off the top of my head. Just probably easier doing this way. Now it's broken below. We can't wait. It's above. We're going to go in again on this one here. right? Clearly that's above. So what time is this? To make sure it's practical. 9 o'clock at night. Most people still awake. I fall asleep some of that time. That's me. But mostly still awake. You're in. All right. 100 pips stop. Normal story. Okay. In. Up it goes. Up it goes. What price are you in? 12,723. Let's write it down. 12,725. Call it round figure. Just make it there. You're in. You're in. You're in. You're in. You're in. Leave it. You're in. You're in. You're in. You're still in. It's come down. You're getting a bit shaky. It's not stopped. It's probably back near your entrance anyway. You're getting a bit worried. Okay. The next day it opens up below. So you're out. This time you've only made 60 pips. I'm not saying you can complain at that. So be it. So it's not the next day. It's how many hours is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 hours. But hang on. What's the time? 9 o'clock in the morning. You'd be out. Okay, 15 hours later. Only made 60. Well, we haven't lost so far anyway. Okay, so now you wait and wait and wait and wait. This is just above here. Nope, it's still a little bit below. So you wait. Down it comes. You wait. You wait. Oh, hang on. This is happening. Leave it. 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 And this one, this is just above. You're in here. That's 2 o'clock in the morning. You're asleep. Ignore it. Ignore it. Ignore it. Probably just as well. It's come down. Okay, you're waiting, you're waiting, you're waiting, nothing happening. You've got to maybe wait a day or so. Nothing's that easy. It's back above here. Let's enter again. Stop loss 100 pips. In, and you're still in now. You get the idea. There's going to be a time you have a move, might stop down, something like that. But if you can find you're stopped out once in 5 and use 100 pips compared to making 500 or 600 pips, so be it. Now, you get the idea. Now, the problem is now, you're getting a bit bored waiting. Get rid of this thing. Come on. You're getting a bit bored waiting, okay? Right, so let's have a look at something else. Let's do, I know we've got a sell out. Ignore the buy or sell, ignore the signal, right? For this particular trading. We got one out. Let's try the GBP USD. All right, go back and do this. Let's go back to the daily. All you're checking now, it's been above this and above this and this one. So from this date forward, you're looking to buy and not sell. Never mind, we think $1 a week, ignore it. You with me? 20th, we're looking at 20th of March. Okay, so go back to the hourly chart. Now we'll look at the 20th of March. Make it a little bit later, okay? Because I can't see what I'm doing otherwise. But so pretend now it's pretend it's this time now. What's the time now? It's 1 o'clock in the afternoon on the 24th of March. Nothing happening. You might be in the Dow or you might be in the NASDAQ. Have a few of them, you know. So if you're not in one, you're waiting, look at something else. Get the idea. Look at that, nothing happened, nothing happened. You wait to this one. The whole lot's above. Not this guy here, this guy here. You with me? Now that's 8 o'clock at night at practical. Okay, in you go. And what would you do the stop on this one? It's much tighter stop. You could probably look in the region about maybe 50 pips. Say 100 pips on the Dow and the NAS, maybe 50 pips. You can work it out, but ballpark rule of thumb, 50 pips, because it's not as volatile as the NAS. So in you go. You with me? I'll look at the chat line in a minute. Just concentrate on this so I don't lose this thread. Just give me a minute and then we can do a Q&A. And then you're in, right? There, you'll be in here, right? Somewhere along this line, not exact. 122.22, 1.2222 GBP plus. Okay, you're in it, you're in it, you're in it, you're in it, you're still in it, or you've got a bit nerves down, yeah? It's in a loss, but you got your 50 pip stop. It's only about 10, 20 pips down. You're not panicking. And if you do, you got your 50 pip protecting you. So you're still not lost on it, okay? It's going up again. You're still in, back in business. Still in, back in business, back in business, back in business, back up. You're out here. Right. That is 12293. Call it 1, 2, make it 1, 2, 3 to make the maths easier. 1, 2, 3. You made 80 pips. When did you get out here? 80 pips. When did you enter? It was this guy here. How long? Anyway, maybe 24, I don't know. But how many hours was that? Because you're out. Let's try and do that again. That's 11 o'clock. And you got in on this one here, 11 o'clock, 1 o'clock. So you'd be in 22 hours on that one, 22 hours, and you'd have made 80 pips. Is that right? 12.30, yeah, just under 80 pips. Get the idea. What you do, Gerard and guys, ignore anything else. All you do, if it's above, not the 10, ignore the 10. On the daily chart, if it's above the major blue and brown, maybe the black as well, preferably all three, you buy. If it's down there, you only sell. If it's these two here, find something as a buy or a sell. I haven't thought the neutral zone out. I only looked after Etchin said this morning. So I haven't looked at the neutral zone. So this stage, find it either in the buy zone or the sell zone. There you are, simple as that. Okay, got the idea? If I'm boring you, tell me. We'll try another on the Euro NZD. I've looked at that one. Euro NZD. Now, next question. We're on the daily. I'm not going to ask you this because it's so blatantly actually on some insulting intelligence to say clearly we're looking to buy it. We're looking to buy it since this date here, which is the 14th of February. We probably won't get that on the hour, so we're going to have to pick another date because we can't spread it out. But remember, you would be able to see it as the 14th. You get it? We're not the 14th now. We're only back testing. Right. So now it's the 24th, and you've woken up in the morning, and you know it's the buy zone, so you want to buy it. Where is it now? It's below the 10 1-hour moving average. Would you buy it below it when you want to buy it? No, 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 no. All halfway house. No. Yes. You can see that? The bottom is just touching it. Sorry, beg your pardon. I'm doing the wrong one there. Yeah. No. Yes. This is when you would enter that hour there, which again is 6 o'clock. That's not 2 o'clock in the morning on the 24th. That's 03, 24th, the other way around for me. At what's the time again? 6 p.m. 1800. And the price we got in at is 1.7325. 1.7325 EP. We're in it now. Let's see. 50 pip stop. Unless you work out a better one off the top of my head, 50 currencies, index 100. Okay. In, still 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 in, out. Okay, out. What's that say? 7353. You've only made about 30 pips, maybe 25 pips out. Okay, and how long does that take you? Probably maybe just under 24 hours. You get my point. Okay, did I get that right? Am I looking at the wrong one then? No, you'd be out here. I'm talking right. I keep looking at this one. I'm looking at the wrong bloody one. Sorry. You got in here. Let's do this again. What price to get in was 73 EP. 73. In fact, it might be an idea to take the 100 out of the way. Just use the 50 and the 200 because it might be getting in the way. Confuse me then. You don't need it. So above here, you're entering. Where's the entry? Yeah, you entered here. Okay, that's 73.44, whatever. And above. Yeah, no, sorry, beg your pardon. You'd be out down there, you'd be out here. And you'd made yourself in the region of about, what's that say? About 70, 80 pips. You get the idea. Now you're out. 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 You're back in here. What time is that? Just stop bloody doing that. It's annoying me. That. I'd rather do this, I think. Sorry, click it on here, probably quicker, probably easier. Right, where were we now? Out. Okay, you're back in here. Right, you're in here. That time is 0900. It's not a stupid time. You're up and about. Put 30. 0900 on what's that time on the 29th? On the 29th of the 3rd. And what's the price you're in at? Call it 1733. Make it a little bit higher. 1.7335. Sheet on this. Might go on about 5 pips later. Okay, you're in maybe that level then. Happy with that? In, still in, out. You might be out here. It's coming off. If you lose your nerve, get out there, fair enough. Or you might have modified your stop, be stuck out. You might actually be hit with a stop. You modify. If your stop gets kept, let's say, on a 1 hour chart, make it 30 pips. What's that say? 30 pips. You've probably been stopped out around about this level. But if you weren't, you'd get out here, and that's 17,402. So you'd still made yourself 70 pips. If you stopped out there, you might have made yourself 80 pips. Remember, so not a day, it's an hour chart, and you made that within 24 hours. You get it? I'm seriously going to try this myself. Those who got the concept right. We'll discuss it further, but I think this might, the trading room guys, get away from this continual fundamental, I won't use the F word, say the stuffing it around. It's driving me insane, it's probably driving you insane. Comments, guys, I've gone through a couple of times. Etienne, guys there, you got the concept, let's discuss. Any negatives, any things you don't like about it, anything we can tweak to make it better? You're doing the short in your NZD. Let's go. Yeah, why would we? Hang on, you're doing the short. Now that goes against it because that's still in the buy zone. If you're doing it short, you're doing your own thing there. You know what I mean? I wouldn't be shorting it. I'd wait to buy it again. Only will I be shorting that if it's below there, and I'll then short it. At the moment, I'll just buy it. That's. I've only thought about this morning. Tweak it, we might get it better. You know what I mean? It's just off what I've been looking at this morning. Give me a break, guys. I've been doing this for about 10 years. That you see what picture, Mandler. See, so I would not be shorting it because the whole thing we're talking about now is it's the buy zone on the daily. So go back to the hourly. If you want to tweak it, you've done it. You do your own thing, guys. I'm talking about new guys come with this idea and we'll develop it together. You think about something, a problem with it, we tweak it till it comes a lot better. It might just work. Hopefully.
Roger, Pietro, yeah. Just quickly, so you looking at the 50 and the 100-day, am I correct? Sorry, I sort of came in halfway with this when you're discussing this.
Right, the 100-day moving average is reasonably important. The most universally important ones is the 50 and the 200. If it clutches it up, I made a couple of mistakes there. I think you're getting out there now, forgetting it's 10 and not the 200. So it might be an idea, if I'll do it now, just get rid of it. Always put it back again, okay? Right, it takes me 2 seconds to go. I save, don't forget you save your templates. Back in business. Get it? Okay, right, I'll just tell you out of the way so it doesn't confuse. Okay, simple as that. Now we're on the daily. This is clear the buy zone. So I wouldn't do what Etienne's doing. I would wait till it goes back above. If it doesn't, I wait and I look at the NAS. I look at GBP USD or some other bloody thing. I won't be touching that on this new theory of mine until it comes down here. Then I won't be buying it, only selling it when it's sort of a whole candle on the 1 hour is below it. So if it's in the sell zone, wouldn't be selling there or there. I'd be selling not there because I'd only sell there. You get the idea? And then I'd be selling it. You get the idea? But I wouldn't be selling, I'd be waiting. So I'd be waiting on the day, selling on what's down there. Whether you think it's overvalued or not, I don't care. Follow what the buyer and sell do in the short term, because I guarantee, looking back, they don't have a clue what's going on fundamentally. They're just doing it, and by sheer volumes they're following it. Even if the pound weakens, enough time buy it'll go up. I guarantee. If remember, gearing leverage means you've got very large contract sizes compared to the deposit. So a guy with 50, well, let's take it 100 million to collect in US dollars on 100 to 1. What's 100 million times 100? That's $10 billion contract size. And they can see there's a glut of oil. But if they're technically still buying it, the oil price will go up because the buyers are bidding it up, if you see what I mean. So we stick purely what the buyers and sellers are doing. At the moment, it's the bid up zone, not the bid down zone, if you get the point. Are you with me on that, Pietro? And other guys? Because when a guy asks, it's usually applicable to all. And some guys, oh yes, thanks for asking that question. I didn't realize that. It's for everybody. So I need you to interact. If I miss it, there's some clever guys in here say, what about this to tweak it? But remember, the major flaw in this is twofold. Number one, you've got to have the time to do it. If you're at a meeting and you're fiddling around looking to go in on it, and then you miss an important point and you missed it, you put your hand up, the chairman of the meeting might get in your case. So if you bear that in mind, I mean, we can fun of it, but just bear that in mind. And number two, in all practicality, you make sure you modify your stop, especially you go to sleep. You know, you've got to remember the times, like I did there. It's all very well. When they go to Hey Lorenzo on YouTube, it's and that's where you get out. Ah, yeah, brilliant. Forget that 3 o'clock in the morning, you'd be fast asleep. So when you're about to go to bed, remember, modify your stop loss, keep it maybe 50 pips away, maybe tweak it to 40. 50 is off the top of my head on the currencies that you use. You can use any, but I just mentioned the dollar. But if you use indices, you need to make it 100. The volatility is that you're going to get stopped out in the winning trade too many times. Bear that in mind. It doesn't matter. You work out your risk accordingly. As simple as that. The matter of 1,000 pips stop loss. It means you go in for 1 micro. If it's 100, you might go for 10 micros. If you 10 pips stop loss, you go for a mini. You get the idea. So it doesn't really matter as long as you make that awareness. The daily is the moment to find out whether I'm buying or selling. I'm buying now. It's in the buy zone. So I'm now going to the only one to buy it when it's above. So I won't be buying it now. It's below that. If this gets taken out, I'm in. A full candle of an hourly candle above it. If it doesn't, keeps coming off, I leave it. I can do a long-term trade and stop me other stuff. This is a short-term stuff where I'm seeing purely on technicals. I can short and play around and do what I like. I might be coming off and I'll stick with that trade or whatever. But I'm not going to do this particular strategy until, on a sell that is, till it goes below there. Then I'll sell it when it gets below the 10 1 hour moving average and get out when the whole candle is above it. Or it triggers me stop in the middle of the night. Make sense? Is that too fast? Are you with me? If you don't, we'll go over it again a few times. Do not try it out unless you've got a clue what I'm on about. Clearly.
It makes
Roger?
again. No.
No, go for it, Barney.
Sorry, just to confirm, your simple averages is 250 and 9 days for the
10.
10
10.
days.
All simple. 10 simple. We might even look at exponential and tweak it, but I'm using simple at the moment. I've only thought this morning, triggered by what Mr. Munir Joubert said. And I thought, let's back test it. It's only since this morning, no more than a few hours this. So that's a 10 simple, 50 simple, 200. I've taken out the 100 for this particular trade. I might put it in for the others. You know what I mean? For the longer term ones. You get the idea. So 10, we can tweak it. You might do it. We're not alone together. Dirk might tweak it. Brian might tweak it. Etchin, whatever, might tweak it and say, hang on a minute. Use these two as simple and make that exponential. What is the different exponential? It reacts a little bit quicker. Let's put a 10-day exponential. You know what I mean? We're on the, what are we on the daily now? Make it on the hour. Okay, I'm going to put in an hourly one. Indicator, sorry, not slow down, mate. Trend, moving average. Right, change that exponential. What should I make the color? It's a white background, so I'm making a black color. See it nice and clearly. That reacts a little bit quicker. So you could say maybe use that. So when you're trying it out, try it out live. You can do on a demo for new strikes, not a problem. But I still need to get your mental in it because the mental is so much part of it. And if you take the mental out of it, you might not get a proper way of understanding it. You know what I'm saying? So preferably on a very small position to try it out, but try and have some real money on it. If you ever play golf, they always say, let's round a beer on it. It gives a little bit of something to it. So maybe if you can afford 5 or 10 micros, maybe 1 micro, just to try it out. Okay, but demo, it's just limiting because there's no emotion and you don't care. You've got to care. That's the point. We've got to bloody well care. Okay, right. So this would be slightly different. On the exponential, you would be in on, let's see an example, where you wouldn't be on the other one. I'm trying to think, because you're looking to buy on this one. Where do you come in to buy on the exponential? All the same so far. Is any differential between the two? You maybe just have them both and understand. I don't know. I've never tried it with the exponential yet. I'm just throwing it out there as an idea. The only difference with an exponential is it does react quicker to price movement at the end of the particular line than this one. This is simple average over a particular of a 10 hours average price. This reacts quicker to price action on the exponential. If you find it works slightly better on the exponential, we'll employ it. I think this moment we'll stick to the simple on those because those are more universally using the exponential. I'm just querying to tweak it. Maybe that will work. So I might just leave it in and see why get a slightly better entry on the exponential, if you see what I mean. Maybe test it a little bit on the demo but you need to quickly get onto the live with a tiny position. This is not for guys at 500 or 600 rand. Sorry, there's very little for those guys. A horrible thing to say. It's like trying to go shopping in a budget of 50 rand. There's not much stuff you can buy. But it's because you've got to get it live to try it out. It'll have an impact. It's got to have a feeling on it. You know, you've got to care. On a demo, you don't care, unfortunately, but you can try it on the demo if you want. But you get my point. I'm going to be trying it out anyway on my live and see what sort of results I get. I would like, if you like it, all do it. If you're disciplined, like the founder of this world, and particularly Anna Marie's this world, try and keep a little bit of a note, a journal when you do it, jot each one down, and then maybe in a week's time we get back together and we can suddenly say, hang on, we've got consistency, this is okay. This could be a change. And everything bad, some good comes out. And this fundamental stuffing me around. I'm starting to think, hey, maybe we can get something. But Phoenix could rise from the ashes. You can see what I'm saying.
Okay, no, thank you very much. Can I summarize it for myself and maybe for the other people as well? First of all, you look on your daily time frame if it's in the buy or sell zone. Then
Interrupt, Arnie. Buy or sell, ignore the 10. Only the buy or sell zone above the 50 and the 200. Only those two. Carry on.
Okay. Then you go to your time frame of 1 hour and see where it open above the 10 days. Then you place the trade.
Correct. Now, would you place the trade now? Anybody think you'd place the buy trade now where the candle is on the 1 hour at the moment? Does anybody see that's where to place now?
No.
No. Okay. Why not? Because it's not above there. Would you place the trade here? I'd like to have it to play a little bit safer, the full candle. We can tweak that to maybe the opening, but even on the opening, the body is the opening. On the green, if we're buying, remember it's the bottom of the bottom of the body, not the wick. You wouldn't. You'd be doing it there. Do you understand? If you say this one here open, no. Let's try to say you might have something where the candle closed below. This one closed below. You might get out here instead of here, even though part of the candle's above it, but it did close. Remember, it opens there, closes there on the red. Open the other way around, opens there, closes there on the green. Remember that way around. You're buying, and that close below, you might take it, even though some of the candles are above. I don't know yet whether it's going to work better the entire candle or whether it's just whether it closes below. That's the thing we're going to tweak, but otherwise you're right. I don't use the Bollinger Bands that much, but I don't think it's going to help the cause. The Bollinger Band is the upper and lower area of a range, and the center line of the Bollinger Band is the moving average. Simple as that. I think what overcomplicate it, if you want to tweak it with a Bollinger Band, you're used to it, you're comfortable with it, and it adds to it, yeah. To introduce at this level now, what we're trying to do is trying to do the advanced driving test. We're trying to get the hang of the just the driving test. You get the point. So keep it simple, stupid for the time being. Carry on, Fanny. Go on. Any questions on that?
All right. So once you entered, then you put your stop loss 100 pips below the indices.
Yes.
And you put your stop loss 50 pips below on the currencies.
That's correct. Just want to add to that. That's an arbitrary thing off the top of my head. I'm pretty happy with the 100 on the indices. Maybe we can make it 30, 40. We can tweak that. I'm saying 50 to start with. We might, with a bit of experience, put it to 40, 30. The beauty is the 30 works better than the 50. It means for the same financial risk, you can go into bigger positions, which means you're going to make more money. But let's just be careful to start. So start the 50 at the moment and the 100 and tweak it. Bearing in mind, you've got to keep an eye on that fundamental calendar, and you've got to remember on the NAS, the opening at 3:30. You remember that can jump around a lot. So just make sure if you're nicely in profit, you might just want to put your stop loss. No, you have a stop loss of bits. No, you'll be all right. If you get stopped out, that's fair enough. Just bear in mind, it can't jump a bit. But so the only you've got to watch the fundamental calendar even this is above here, and there's you're in the euro and NZD, make the or the US dollar Japanese yen. That's the base currency. Dollar Japanese yen, and even though it's to enter here, and it just happens to be the entrance seems to be, let's say, at 3 o'clock, and there's the non-farm payrolls coming up at 3. That might be, or CPI. It might be an idea if you're a dollar-rated product just to miss the trade. Does that make sense?
Yes. Question. Etienne have obviously done it, maybe. What I would like to know is if there's some fundies coming out, will it not be better to do a trailing stop loss?
No. No. Okay, sorry. Yeah. Yes, I'm talking about entry. If you're already in trading stop loss, if you want to do it, no problem there. We're going to put it, I'd like to have a wider one on the indices than you would on the other. You will, over a period of maybe a month or two's experience, or even a couple of weeks' experience, find out the trading set comfortably on the NAS, maybe 50, 60, and maybe 25 on the, I don't know at this stage. But yeah, you'll find by tweaking it where you're comfortable with the trading stop, and you can even do a trading stop when you go to sleep at night. No problem there. Okay. But I'm still saying at the moment, when you enter, we'll stick for the moment at 50 and 100, but we can tweak that when you're going to sleep or whatever, or a fund is coming out tomorrow and you're already in it, and you placed it today, and the fund is coming out tomorrow, then you could use a trading stop loss. I'm saying I would not be entering just before the funding. That's what I'm saying, the major funding.
Okay, great stuff. I think I got it. It's just then you normally change your TP or don't put in a TP and look when it start breaking, the candle start breaking, then the 10 days that you get out of the trade, if your stop loss or trading stop loss is not very close to you wherever it's breaking. Am I correct by saying that?
Right. Now, why do you want to put a TP in? Because you got the trailing stop loss when you go to sleep, and you don't want to be out by hitting your stop loss. You've entered here and you put a TP there, and it kicks you out at 4 o'clock in the morning. What's for? What for? You've got your trading stop to protect, so it won't come back streaming down. The stop loss is there. You want to be in it. Your TP is when it breaks below there. So what's the point of putting a TP in? You'll be exiting either on your trading stop loss in the middle of the night or your modified stop loss when you're awake, and you will not be having a TP because your TP will be the target is when it breaks, the candle closes or the full candle or the closes below the 10-day or the 10 hours, sorry. Do you understand where I'm coming from?
Okay, that part I'm still not very sure. So you do not have a TP, but then it get closed on your trailing stop loss or your manual stop loss that you put or adjusted accordingly. So bottom line is, yeah, okay. Makes sense now. Yeah,
that makes sense. You'll get that, guys. You don't need a TP because you're protecting your trading stop, and you don't want to be out the TP because your TP now is when it drops below that 10-day. Then you'll manually exit, and if you're fast asleep, your trading stop will knock you out. Got it? Anybody not got that? I'm willing to go over 11 o'clock if you got the time I have, because this could be, hopefully, don't jump the gun. I'm very much believe the combinated discourse could be a bit of a game changer. And I have to say thank you, Etienne. You really got the sparks in my head thinking. Not just that, but this incredible frustration I've got with these bloody fundamentals at the moment, all over the place.
So Roger Pietri again. So we check our entry levels on the hourly mark around with the 10 moving average. Am I correct?
Yeah.
Okay.
Now, as you notice, the black one is the 10-day exponential. I just chucked it in the off charts. That needs a bit of tweaking. I always use the simple, but this might be a better one to get a slightly better entry. If it just can give you a 5-pip better entry, it's 5 pips you didn't have in the first place. So tweak that going along. It's the concept we've got to have in the first place, and then you can tweak it as we get better at it. Now let's take the US dollar Japanese yen. We haven't done I've done it. If you can stick around, I haven't spent another hour, so I don't mind. If you can make us money and it makes us a continue for an extra hour of time, it'll be the most highly valued hour. Even the lawyers won't charge that. Sorry, lawyers. Right, dollar yen. We haven't tried that. Okay, so let's do the same stuff here. First of all, first question here. Just get rid of these guys getting in the way. I think the trade levels there as well. Get them out of the way. Right. First of all, where is it now? In the buy, I haven't looked at the neutral. So at this stage, we find a way around the neutral zone. Look for another. There's plenty of instruments there. If you can't find, if one you want to look at, this is in the neutral zone, go on to something else. For the moment, I don't know about the neutrals. Go on to the buy or the sell zone. We'll tweak it. Now, that clearly, obviously, is below these two. I'm worried about using that to the buy zone. That's the sell zone. Are we good? So we do, what do you want to do? We want to be selling it. Well, Pietro, if you've been staying around waiting a freezing June evening in Johannesburg, I don't know where you live, by the way, but let's say in Johannesburg, wait for a client that doesn't pitch up, sit in your lone little motor car to show them around a property, I think you stick another hour for this. Yeah, I sympathize with you, estate agency. Yeah, in fact, I sympathize with most sales guys. In fact, I find most people, we deal with general public, it's not always easy. Okay, where are we now? Yeah, so let's clear the sell zone. We've worked that out, so we clearly want to look for a sell. Now we go to the 1 hour chart. Right, now this has opened up below the 10-day simple moving average. That's on the 1 hour chart. It's opened up, but the entire candle is not below that. So you might think, I'm going to wait. Oh, that's where we're going to tweak it. That is slightly below the simple, but it's not below the, maybe you have both on for that reason. If it's below both on the opening, because it opens there, closes there, or the entire candle, including the wick, is below that. That's your choice. Okay, so let's say we wait for the entire candle, I don't know. But that's an area there, which quite frankly, glad I picked it. We could do a live one on this one. Okay, let's see how that works out. We do a live one on this one. Now, what's the consensus? Do we wait till the entire candle is below the simple or the exponential, or the opening is below the simple? That's the question. You get it? Just make it a bit clearer. See what I mean? Because that's sort of not open below there, it's over there. I'm suggesting maybe we wait. Let's just start off with the original strategy that we wait to see if that opens below, which is going to go to 12 o'clock, so friggin' nuisance. Okay, but anyway, the point is, if it was below, you'd enter it and you put a 50 pip stop. So your stop would be, let's say 133.02, 133.02, which is quite nice, it's out of the way anyway. Okay, and then you'd hang on in there and hang on in there. Let's back test it, because this could be a possibility of a live one. We can try this afternoon. If we can maybe wait for the hour to confirm, okay? Because it didn't open at, actually, hang on, 4 minutes time is 11. You have to wait till 12, Roger, you idiot. We've only got to wait 4 minutes. We'll come back to that. Let's have a look. Let's back test this. We were going to be selling it. You might have sold it there, and then unfortunately it broke up, so you'd be out here. So if you did, never mind your stops up it, ignore it. You sold it in the sell zone here, okay, opened there, and then you'd move it up there. This was above it, you're out. You only lost 28 pips. I'm glad I found a lot, because it wins every time. That can't be done. It's impossible. Otherwise, the whole world would have discovered it by now. If Etch and me can discover it, believe me, the guys at these computers have discovered it. No, you know what I mean? You're not getting 100%. That's a fact. And I was hoping we're going to get a loss. Sounds strange. The beauty is that loss, we can turn a lemon into a lemonade. You've entered there as a short from the sell zone. What's happened there? You with me? It's gone up. Never mind your stops up here. Don't care. It's now gone in and opened up above. You exit and you'd have lost 28 pips, even if your stop was above here. Do you understand? What time is this, by the way? Make sure to get practical. It's not in the bloody middle of the soddy night. What time is this? Where is it here? 8 o'clock in the evening. So it's practical. Only trouble is when you're out, that's going to be 2 o'clock in the morning. So unfortunately, you might lose 50 pips on it because you're fast asleep. Unless you put a 30 pip trading stop, then you'd have lost 30 pips. but we've made a loss. Hallelujah, because you're going to do that. Right. So now you ignore. We're ignoring at the moment. Maybe 11 o'clock, if it opens below, we can take the trade. And it's looking like it because the body is moving down. We might get at 11 o'clock an entry here. Let's try it out and then we can discuss it later on at 4 o'clock, see what happens. If we make a loss, what is the loss? Other one, we might try another one. CAD JPY, it's another one. US dollar JPY. We'll just wait till after 11, see if we get an entry. And then we're going to do another one, the CAD JPY, because that's a similar one. Okay. Come back to that. Remember, I've got it written down. CAD JPY. Put it back on the daily. Right. Where's the 200? Right. What are we going to look for? A sell. Got it? Sell. 1 hour. Where is it? We can't sell it now. Do you understand that? We can't sell it now. Get it? We can't sell it now. Where we made a loss on this one, if you sold it down here, and what time is this? 11 o'clock, opens above there, you would be out because that's only about 3-4 hours later. It's obviously during the day, and you might have made a 10-20 pip loss, handleable. You get the idea. So maybe that one, if it opens below, we can do it. We can't at the moment. Euro US dollar, let's try that one. Euro US dollar, see if we can get an entry. US dollar yen, we can get an entry live. This might actually, again, let's have a look on the daily. I think it's in the buy zone. Clear it is. We want to buy it. Go to 1 hour. That was time now is 11:10:09. You'd be buying it here. You'd be buying it here, around about that level. And let's see how it works. Well, 31 in time. So thank you again. We'll put that up. Euro US dollar. A buy, cheating slightly because we're already in it. Make it 1.0850. Make it 1.0860. We're cheating slightly, so we'll rise up here. We've got a 1.0. We probably would have gone a 1.855. We'll make it 60. Okay, that's the EP. Now we're in it. This is what we're going to do. It's only an hour old. Now it's just opened up. We opened it now at 10 o'clock or 5 minutes past. On opening, we'd have opened that up at 10 o'clock. So that's the price we'd opened up. It would have been 55. Let's get it properly. But we'll leave it at 60 because of the spread. So we got in on the spread. The spread is covered at 60. Okay, now we're in. Now we're going to hold. I'm going to hold. We're going to put the stop to start with 50 pips below that. Now it's gone up so far on opening by 27. We want to keep it 50 pips away. So now it's opened up there. You modify your, I've just thought off the top of my head, modify your stop loss by 25 pips. So now your risk is not 50 anymore, it's 25 pips. You get the idea. And then you let it run until it breaks below here or it hits your stop loss. Okay. And keep your stop loss at just as you're awake, put your trading or whatever when you go to sleep. But make sure your stop loss is at a decent level. You don't want to be stopped out and it's still above the 10-day moving average. Bit of tweaking on there as well. Last thing you want to do is put your stop loss here, stops you out, and still above there and screws on up. But you'd been on this one. Who spotted this? Gerard. Well done, Gerard. And Etienne's had some cracks at it, so this might come quite nicely. Okay, let's go back to dollar yen. So this one we're in, we'll see how it works out at 4 o'clock. Remember, now you've got a 25 pip stop. So you entered at 55, you've modified your stop now to 60, sorry, to what's 35. So it's 1.80835. I'm writing it down, SL, and we entered that 10 o'clock. You got it on the buy. Just put a note down there to check later on. US dollar yen. It's just open. Let's see if we can get the one on this one on the live one here. Right, we're in on live. 1 hour. No, we can't do it. We can't do it. You understand? We can't do that one. Let's go back to our NAS. As we're doing, because we've got a real trade on that one at the moment. NAS, anything happening on there? Not much, but if you'd use this system, you'd do a nice profit. So we can't do that one, but we'll be in the euro dollar. CAD JPY, how did that open? I think we missed that as well. So we can't do that. Anything else we can try? No, we can't. What about the GBP USD? looked at earlier, buy zone, where we, oh, that's the one now, we know it's in the buy zone, we just check. Still in the buy zones above these guys here. So go back here, never mind what the trade says. The sell zone's above there. It's above here, we wouldn't be entering, in theory, we should have been in it. If you're entering here a full candle, you'd be entering there. If it's an opening, it's this particular hour. Should be buying it at 23.20, and at the moment you're up 32 pips. So you'd probably modify your stop from 50 pips below the entry of your opening, and to make it 50 pips below the market. So you've still got a 50 pip stop. Your 50 pip stop means your stop is at this level here. You with me on the maths here? Which again is only now about 18 pips below. So the worst scenario now, you're losing 18 pips. You get the idea. Right, comments, guys. Never mind, it's after 11, a lot of guys left, so be it.
Sorry.
Go for it.
Sorry, Roger.
Sean Mundler, go on.
Yes, Roger. Does then this simply means that if the price is above the 200-day period and the 50 period, and then we can only look for a bullish trade.
Yeah.
And then if the price is below these two guys, this 200 and the 50 period MA, we can only look for a bearish trade.
Correct. Nothing else, nothing more than that. Once you check that out in the daily, then you go to the hourly. So you're looking for a bullish trade. You're not going to join it now because you want to join the break. Don't chase it. Look for something else. This is one. What's the time now? 11, 10, 9, 8, 9. This is something we could have entered along. Never mind the signal. Never mind what's happening in America, Japan, Timbuktu, Bali, or whatever. Ignore it. Okay, you'd be entering. You wouldn't be entering there. That's the lowest in the hour and the highest. You'd be entering there. You get the idea. If it opened just above that, no. If you're using the simple, you'd have entered there. Beg your pardon. You'd have entered there.
Okay.
Okay.
No, thanks, Roger. Thanks. I understand now. Thanks.
You got it. Okay. So if you entered there, because we're not cheating, we've got to get this right. Then you can cheat. Already, since you entered at 9, 10, it's now 11, you're up 30 pips. You get the idea. And you just hang on. You haven't got a TP, you're hanging on. Now, because it's 30 pips in profit, you opened up with a 50 pip stop, you'd modify your stop 50 pips away from where it is now. So your risk is not 50 pips, it's now only 20. You wouldn't have a TP because you never put a TP in because you only want to be out and it's candles below the 10. So you're going to sleep now, or you're going to go and pick your daughter up or your wife up, or your kid's got to go and do something during the day or whatever. You can put a trading stop or modify your stop. That's all you do. So you're protecting by the stop. So if you're away, you want to still be in. It's still above the 10-day. So if it comes down the 10-day and it closes, but hasn't hit your stop, you're still protected. It will hit your stop. It won't come all the way back here because you protect. All you worry about is protecting yourself with the stop and then riding it until you're out. And then let's say your stop is down here and you've made a fat profit and you see the candle on the next hour and you're in front of your computer, opens there, you just close it. You don't worry about stop losses, we can't be one. But I mean, then you just close the damn thing and you bank it. Now you look for something else. You've done a couple hundred pips, 50 pips, 80 pounds, whatever it is. You're psychologically, trust me, guys, experienced or not, you're on a high. So now you look for something like the NAS or Etienne says the Dow. So now let's see and find something else, but you've got to be disciplined here because you're on a high. Don't chase it for the sake of it. What we're still on the move on the Dow on the upside. We go to the it's the daily. Sorry. Daily, it's clear in the upside there. So you look for a buy, not a sell. Go to the hourly. You would have been buying. Probably if you're doing it properly, you'd have been buying back here. But no, you woke up this morning. You only knew about it just now, and we had a trading room at 7 o'clock this morning. And you like the idea, you would have been buying there because this is now 7 o'clock, a bit early. Okay, sorry about that. 7 o'clock, probably a bit practical. Okay, you learnt it, you'd have entered here. Happy? Because you only learnt the idea at 7, so you'd have missed it. So you're entering here this morning at 8. Here you'd have a 100 pip stop. It's now up, it's up 100 pips. Modify your stop to break even and hang on in there. Now you can't lose the trade because it's still 100 pips behind and you're 100 pips up. Now you modify, so now you're more relaxed because you now break even at worst. And it's still in this area here. Let it continue until it breaks below here. And once it breaks below here, or it's 200 pips up and you've kept the stop 100 pips behind, you might think, hang on, it stopped you out before it's broken through. Whether you take that or not, it's up to you. If it's 300 pips up and it stops you up, so be it. You made 300 pips, stopped out instead of 5 when it continues. Look for an opportunity elsewhere. You get the idea. No problem, Dirk. As long as you get the idea. Once you've got the concept, you can tweak it. My worries, guys, are going to do without getting the concept. Questions, guys? Questions?
Yes, sorry, Roger. So, for example, looking at your trend of the Dow now, so it's too far away from the 9 or the 10 days, so it's not good to enter now.
No, you've missed it.
Okay, then you look for other opportunities. You
Look at
just
other
missed it.
That's correct. Let's go back to dollar yen. Euro dollar, look to that, the euro dollar. We had
Thank
not.
you, Ken.
Yeah, sorry, dollar yen, we can find where is it now? Dollar, sorry, the euro dollar. That we had an opportunity recently. That's why I quite like that one. Thank you, Hera. Because that one we could have entered here, either on the opening above or the full candle. I'm not quite sure yet because it started this morning, as I said. If you opened up the full opening above, if we work on the opening to start, you'd have got in that figure there. If you got the whole candle, then you'd got in there. 50 pips stop, then it's up there. So now you can modify your stop 50 pips away from there and continue. Let's see if we find one. I prefer, let's start with the dollar ones. AUD. So let's find one. I'm carrying on here till we've all got it because I'm quite excited about this. I hope you are as well. Let's go to the daily. Right, sell zone, obviously. Right, now we're going to go back over the hourly. The problem is that's in the buy area at the moment, so we can't join it. It's above. We want to sell it, it's above, so we've got to leave it. You can do a longer term one. If you think it's going to come off, see dollar strength and all that sort of stuff, you can do another one there. I'm talking about the shorter term players. You're not looking at DXY. The only thing you watch out for is a funding. The last thing you want to do is go in before a CPI, GDP, or a non-farmers payroll coming up in an hour or two's time. You know what I mean? Then that's the only time to ignore it. For the moment, you can't join this one because clearly it's still above. You'll be selling because it's in the sell zone. You get it? So you move on to the next USD one. The next one would be the euro. We've done that. GBP, we've done that. Can we just do a quick check? No, we buy this one clearly, but we can't. We've missed it. We would have got it this morning at around about 8 o'clock this morning. We'd have been in. We have bought at 8 o'clock this morning because it's clearly above there. 50 pips stop. It's now up 40 pips. So now you move your stop and your risk is now 10 pips. What a pleasure. You get the idea. Okay, now we try the next one on the line is NZD USD. Sorry, just give me a second here. NZD USD. Let's quickly look at that. We'll do the dollar ones to start off with. Right, daily, let's have a look. Neutral zone. This stage, we leave that. What's the next one in line? NZD, US dollar CAD. What we're looking at here, it's come off now. So in the sell zone, so we can't do that. It's start to move down. So we'll ignore that one. We're not even looking at the hour one, we ignore it. What about US dollar Swiss franc? Got some here. Sell zone. Got it? We're in the sell zone. Below the blue, not the red or the black, between the blue and the brown. It's below sell zone. Now we're going to go to the 1 hour and see if there's anything there. We've missed it, okay? But now we won't miss it next time. You would have been in here, not quite below, so you probably would have waited and then maybe in here. Got in here. What's the price now? It's 15 pips up. So you modify your stops, your risk now is 35 pips. You get it. Now, let's have a look at the cost involved in 50 pips. Different on the micro, this is a normal one, this is a Swiss franc or whatever, normal currency. But never mind the T, we'll put the TP in there. Well, we're going to be shorting it, aren't we? That's right. Might get that right, yeah. Right, what should we put the TP in at? Make it around 90. We're not having a TP, I'm putting in for the purpose of this thing here. You don't have a TP, I'm just putting it in so that we don't get a screw up on the indicator. Just want to get this in for a purpose now. 50 pips. What 50 pips above that is 9208. 0.9208. There you are, $100. $100 to micro. So that's probably, check. I mean, remember, it's $100,000 Aussie, it's 100,000 Aussie, 100,000 pound, 100,000 euro. The difference is slightly different. So quickly check, but it's not exactly, but I think overall it'll be around about 100 rand a micro. So you know when you're going in, it's about 100 rand a micro, and you go from there. Okay, so 100 rand a micro for 50 pips. So you know if you make 50 pips, you made yourself $100 on a micro. If you can afford a 500 rand risk, you make 100 pips, obviously you make 500 rand. That depends how much money you got. It works extremely well with volatile instruments. The last thing you want to get stuck in is something that doesn't happen. Boring, yeah. Not just because it's not happening, it's boring. I mean, I know you're going to get to Pretoria from Joburg in the end, but let's be honest. Who wants to be stuck in a sodding traffic jam? It's boring. I'm not sure about the oil, forget it. I think gold, I haven't even looked at gold on it. Come down the line. Guys, what am I doing wrong? I'm just posted me something on the WhatsApp. What he's doing wrong is he's completely, totally got his volumes wrong. He's totally overexposed, gone ridiculously high volumes. Trade's gone against him, and I don't know what he's doing wrong. Simple answer. He's not got the right volumes.
Roger, a question, please.
Yeah.
You put in the exponential moving average. Is it just the exponential or double?
Yeah, it's just an exponential. I might take it off. I'm just using that just to see a tweak. It might be better to have it on the exponential and simple. I think I'm just to save complication. I'm just going to take it out.
Okay. Because I went to my inserts, my indicators, my trend, and I can't find. I only have the double exponential, and also I do not have the simple moving average. I only have adaptive moving average.
If you want adaptive moving averages, you got me on that one. Simple exponential, smooth and linear.
There, I see. Okay, I must click on it for a window.
Yeah. Correct.
Okay, thank you.
Good. Okay, good stuff. Okay, so yeah, NAS Dow. Let's try the Dow. We missed the Dow, I think. Yeah, but keep that couple up. Might be times. Don't push it when you can't find something there. Well, you've got other trading, other stuff to do. Go and do your shopping. I don't know, but don't push it. But let's see how that works. So, what's the dollar yen? We've got the euro dollar. We're running the euro dollar. Slight cheap. We've got it at 10. Although when you discuss it, maybe we should have discussed it earlier in it. So let's just say 10 o'clock. I will discuss it at 4 o'clock this afternoon. Those who can make it. We're in on it. Don't forget, modify stop. Keep it 50 pips behind, or exit if it drops below the red line. The full candle. Get the idea. So on that as a buy, and then the US dollar yen. I think we missed that. Let's have a look. Yeah, we missed that. No, we haven't missed it at all. We want to short it, and we don't want to buy it. It's in the short zone at the moment. We're following purely on the technicals, so we haven't got that one. Swiss franc. We would have done it this morning, and we would have done it at that level. No, we can't. Slightly above. We can't really got it. This. Let's not cheat here, guys. That's always squeezing. We know now. That's the most tempting thing to do, because you know now what's happening. Then try and ignore that. You wouldn't have got in there because it's not below. There's where you got in. Okay, so you would have got in, and that would have been at 8 o'clock this morning. Most people are up. You got your computer up. Okay, at 91. So we got it at 8 o'clock. Let's try that. US dollar, slight cheap, but you get where I'm coming from. A sell, and that would have been at 91.77. 0.9177. Be at 0800. I'll put the time down. Okay, and we're in it, and you got a 50 pip stop at the moment. Now it's 11 o'clock, 3 hours later, and it's moved down to 15 pips, call it. So then you can tinker with your stop and modify it to from 50 to 35. So your risk is not 50 anymore, it's 35. So in other words, instead of being 100 rand, it's now 70 rand as your risk per micro. So you reduce the risk. You haven't cut it out, but you've reduced it, and you are physically in profit. I'll be with it. That's another one. We owe 800. I'll put the time down so we really did it, and then we can play on that and see how. And keep an eye on it, guys. I've got other stuff to do, so I'll keep an eye. I want you guys to keep an eye, and if we can find something at 4, let's have a go at it. And what a pleasure, because then it'll make it a lot more exciting. Because there's nothing more debilitating morale is when you start taking more losses than wins. Your enthusiasm takes it and compensates it all the smack. I might do, but I'm just worried from the fact I haven't looked at it, by the way, to be honest. The only thing that worries me about it is the fact that on a smaller time frame, you've got a 4-pip spread here. I would do, if there was no spread, no costs, I would look at 15-minute. Yeah, that's the only reason costs. But we can try it on a 15-minute if you like. We want to short this. We want to short it here, right? Then you got in there, and yeah, now you've been up, well, 16 pips. Yeah, it's probably the same as the hour one, actually. It was the same entry. Maybe you can check it out. Maybe the 15-minute. 4 hours too long. I'm looking at the hour now, but we'll tweak it, guys. Haven't looked at the 15-minute yet. It might work. Let's try something else. Go back to dollar yen. That's the wrong way. Wouldn't work on it wouldn't work either. So it's not. That's what I was worried about. The 15 means get in the hour. Didn't. I'd rather the slightly longer term. But the corroborate, you can't give them a 15 minutes as well. Let's try something else. Nasdaq definitely won't work. Can't do that. It's in a neutral zone. I'm not sure. If you can, I think the hour's probably the better, but I can't say that for certain because I haven't tried it. But we'll do it over the coming days. If we get this right, then we'll all meet up. I don't care where we are. We'll have enough money to fly and meet up. Preferring Cape Town, not Joburg. I like Durban as well, but not Joburg. Okay, all good. What I'd like you to do, here's a bit of homework, guys. Think about it, play around with it if you've got time. Guys have got a job to do at work, clearly you won't have it, but the guys in between trades or whatever, occupy yourself, tweak a little bit, and then we'll discuss again and update it at 4 and see what you guys came up with. I can't promise how long I'm going to be on it. Okay, because I'll try and be sometime, but other stuff to do. Etienne, you keep on top of you're on it quite a lot. Make a note of ones you find it works quite well on. We'll all make a note, jot it down, keep a note in the journal or whatever, and see how it works out. And get some consistency. Well, give it at least a month, not like 2 or 3 days of hallelujah. A month. Consistency is the name of the game. And then we say, bloody hell, what a pleasure. Because and then I can turn around and say, come on, guys, let's find a forum. Let's all retire and do this full time. Only thing you'll have to pay is because I'm qualified, you'll have to pay me some lawyers' fees. What's that, R1,000 an hour? But apart from that, I'm cheaper than half the price. No, actually, it has to be Etienne you pay because it's his idea. Oh shit! Better shut up, Roger. Hey? But joking apart, Gerard, Etienne, or whoever, Fani, we've got the time to do it. Come up with a few ideas, and don't forget, a few silly comments and banter are welcome. You can't stop me doing that. Okay, brilliant. Thanks, John. But guys, don't bother if you've got a job to do. We'll get in trouble with the boss now. The guys have got the time and the bosses overseas or wherever. Okay. Catch you later. And then I think it'd be quite happy with Pedro and make some money, get away from that bloody sitting at 7 o'clock in the June evening waiting for a guy to pitch up that can't get over. I did it. My sister did it for a while, many years ago, about 20 years ago. And I joined her for moral support. And I thought, hang on a minute, you're tougher than I am. And this is not fun. Not the selling part, sitting being stood up part. Okay, guys, that's enough for now. Catch you later on. Cheers.